What is going on, investors? Hopefully you guys are doing well out there. Time to pick up the story of Berkshire Hathaway. Obviously, Warren Buffett's company, ticker symbol BRK.B. You also have some A shares as well. I tell you what, if you're overloaded in technology and meme stocks, if you will, this is a great stock to kind of balance things out a little bit. Over the last year, you're up 24%. I mean, you're not giving anything away. Year to date, you're up 12%. And over the last 5 years, you're up 83% on these ones. And it always makes me smile when we go through these companies because you get some comments from Warren Buffett, who looks like he's turning 94 years old later this year. We certainly hope he's got a couple more years at the helm of this company, but he did indicate that Mr. Greg Abel is going to be the successor. And here's the interesting thing, and this is something that you all can learn from, because everybody wonders, what does it take to understand stocks? Do you got to get an MBA degree? Do you got to study finance and all these things? And I think Warren Buffett basically tells you right here. He says, I would leave the capital allocation to Greg. Basically, we'll talk about Berkshire Hathaway in a minute, how they have a massive like $180 billion in cash. So this Greg guy, man, he's going to be in charge of that. And Warren Buffett says he understands businesses extremely well. And if you understand businesses, you understand common stocks. And I think that's very well said. And that's something that you can learn from. I tell you what, when you're sitting down at a dinner table, you're with friends, you're coming across anybody that you meet. One of the things I always do is I talk to them about their job. I talk to them about their businesses. I'm surrounded here where I live. I'm surrounded by farmland. And so I'm never going to get into the dairy business or the dried nut business or the transportation business or the dried garlic business. But I know a heck of a lot about those businesses because everybody that I run into, I talk to them about their business, try to understand that. And I encourage you all to do that as well. Your wife's friends, your friends, people that you meet, just talk to them about their jobs. Talk to them about the businesses they work for or they operate. And I tell you what, that is going to help you. Now, understanding Berkshire Hathaway is understanding it is like a blast from the past with this company. This is the company's corporate website, which I don't think has changed ever. Also, you see links to the company's financial reports. This just makes me smile as I've been designing websites really for as long as this type of style of website used to be relatively popular and common. The company is just simply the definition of no frills. And I would be surprised if that changed even when Warren Buffett decides to move on. $180 billion in cash. It's balanced off by some liabilities, but honestly, when you look at these financials, it's a very unique company. It doesn't get much better than this as well. Now, they have two main businesses that they operate. You have the insurance businesses, which is primarily Geico. You also have the railroad and utility and energy business as well, which is a conglomerate of a couple of different companies. So on the insurance side, you had about $65.5 billion, obviously a relatively steady business. Last year, you had closer to $63.5 billion. On your costs and expenses on the insurance side, you had about $54.3 billion in costs. So you had the 65.5 in revenue, and it's balanced off by about $54.3 billion in costs. In fact, over the last year, despite higher revenues, you had lower costs there as well. So that's certainly going to drive to higher profits in that division. Here's your railroad business. You had $24.4 billion in revenue. Last year, you had closer to $22 billion. Your railroad costs came in at 22.2. So off of this $24.4 billion, about 22.2 of it goes away in cost. That compares unfavorably to last year where you had closer to $19.8 billion. So your total revenues in the businesses that they operate, we'll get to the equity portfolio here in a moment, where they own Apple, American Express, Coca-Cola, Bank of America, and several other stocks. $89.9 billion in revenue. Last year, you had $85.4 billion. That's balanced off. Look at this. Whoever is the CFO in charge of finances over at Berkshire Hathaway doing a fantastic job. $76 billion last year, 76 and some change this year. Now, one thing that you'll notice is, hey, wait a second. Revenues went from 85.4 up to 89. Costs stayed basically the same. Well, what happened here? Our earnings before income taxes drastically declined from 44 billion down to 15.2. Well, that is because you have these investment gains, or if they are in parentheses, it means losses. Last year, they gained $35 billion, nearly $35 billion. This year, just $1.9 billion. So you had massive investment gains last year. This is the portfolio of stocks that they manage outside of the railroad and insurance business. Last year, obviously much better from that perspective. Come down to net earnings. 35 billion last year, down to 12.8 now. Flow down to the cash flows over at this company. Again, this is only going to focus on the insurance and the railroad business. Last year had about $8.7 billion of positive cash flow in the first quarter. This year, all the way up to $10.6 billion. Here's also where you're going to see the acceleration of the buyback with shares of Berkshire. We'll also look at this technically with shares trading towards the top of a trading range. I actually thought it was interesting that they cooled off the buyback from 4.5 last year down to about $2.6 billion. Also with the shares elevated, every dollar in that buyback goes a little less far than it did a year ago. So everything looking great. Cash flows, operating profits, everything looks as Warren Buffett as you'd expect, very much steady. Now, here's the investment in equity securities. This is a very unique company in the fact that you get a mature railroad and insurance business that just generates positive cash flow and positive profits every single quarter, virtually in every type of environment. You get net income, operating profits, and then obviously I showed you operating cash flows in that business. Well, this company is very, very unique in that they take that money and then they go invest in other securities, primarily 75% of the portfolio, which is now ballooned to over $335 billion of fair value, which means if they were to sell the stakes today and get the full price. Now, obviously, if Warren Buffett decides to sell all of his American Express, which I think he owns well over 25% of the company, Apple and some of these other corporations, obviously their stocks would tank, and so he wouldn't be able to realize this full value on the day he sold. But let's just assume he does. Well, it's worth over $335 billion, and you've got a market cap on this one approaching $875 billion. Factor in, they got $180 billion in cash. They've got over $335 billion in these companies, which again, 75% of this is in American Express, Apple Computer, Bank of America, Coca-Cola Company, and Chevron Corporation. You do see since December, most of those stocks haven't actually been performing great. We know specifically here on the channel, Apple has gotten off to a rough start of the year, but just reported earnings, and this is probably before they did that, so these numbers are actually probably materially higher as Apple shares climbed over 6%. 353 in December, down to 335. But the beauty is their cost basis on those shares is just 103, so they're sitting on just a $232 billion unrealized gain. So yeah, you read that right. They have a total portfolio worth $335 billion that they paid just $103 billion for. And when you buy shares of Berkshire Hathaway, you're actually buying this. And again, you're buying the railroad business and the insurance business, which I showed you is profitable from an operating perspective, net income perspective, and certainly a cash flow perspective as well. Now, from a technical perspective, fans of the show know I love when you can find stocks that do this, and there's a handful of them. You pull up a chart of Costco, pull up a chart of Nike, and you can get it to look like this. Basically, the stock has been channeling upward since the beginning of time, which for Berkshire Hathaway is back in the mid-1990s. Some of you might not have been alive in the mid-1990s. I think I was like in middle school. We have touched down on the bottom of the channel a few times in areas where it makes a lot of sense. During the great financial crisis, you hovered along the bottom of the channel. During COVID, you touched the bottom of the channel. But now we are at the top of the channel. You got to be a little careful when these stocks trade at the top of the channel, because notice one time when the Berkshire Hathaway traded at the top of the channel was back in 07. You could have bought shares of Berkshire back in 07. You didn't get your money back until about 7 years later, all the way into 2014. Same is true very initially back in the late 1990s. You had a dot-com crash. You could have bought in the 1990s. You actually wouldn't have broken even until 6 or 7 years later. That is why when we see these big channels, what I like to do is dissect them in half and just show a little patience, wait for the company to pull back to the middle of the channel. That is where you're going to start positions. In my son's portfolio, I've accumulated shares back when we touched the middle of this channel back here, and that's going to be your time to accumulate shares. Now, if you own some shares and for some reason you want to sell them, well, I tell you what, you are at a level where you certainly can take some profits and secure some profits. After all, we buy these stocks not just to watch the numbers go up on paper, but if you want to buy your wife something nice or buy your kids something nice or yourself something nice, well, you're at a level where you could potentially do that. Folks, that was Berkshire Hathaway. We'll be back next week. A lot of fun earnings, a lot of smaller companies next week. We'll bring them to you here on the channel. Thanks for tuning in. Good luck with your investments.